my name is Samantha Musoke and I work for Humentum. And our mission is to improve the equity, resilience, and accountability of nonprofits in the sector. Now, I'm also the project director for IFR for NPO, which is developing INPAG, International Nonprofit Accounting Guidance. One of the things that we care about a lot is being able to assess financial sustainability. And one of the ways to do that is to look at general reserves. So what I want to do in this video is a Humentum take on the INPAG Exposure Draft 3 illustrative financial statements to see if we can calculate reserves. Spoiler alert, I think it's difficult for us to do so, and I think that's a problem that we have got time to fix. So if we look about information about financial sustainability, we should be able to get that from the financial statements by looking at the level of reserves. We can get it by looking at cost coverage, income quality, and we can get it from the narrative report in different ways. So I want to focus really here on reserves because I think that all the other areas are quite well covered in INPAG. And it's just this area that I think we've got room to explore a bit further. So what is the purpose of having general reserves? So at Humentum, we talk about having the ability to survive a funding gap or survive a shock and having enough reserves to tide you over. Alternatively, worst case scenario is just enough funds to wind down responsibly if that's what happens. It's often considered in terms of the number of days. So you'd compare your general reserves at the end of the year with your annual expenditure times by 365. That gives you how many days. Is it 20 days? Is it 90 days worth? How long could you run if all your funding dried up? Now, how's it defined? There is no internationally agreed set in stone definition. At Humentum and the research that we've done on this, we have used unrestricted, undesignated funds that are not tied up in fixed assets. If you have a funding gap, you don't have to sell your building to keep operating. So we take out fixed assets. Another way that accountants can talk about that is use this term unrestricted net current assets. That's accountant speak for how we at Humentum calculate general reserves. Now, this is the extract of the Statement of Financial Position or balance sheet from the illustrative financial statements in ED3. And you can see it has this section at the bottom for unrestricted funds, which come to 692. That's an important number, so remember that. It also has this line for revaluation reserve. And it's just important to note that when INPAG uses the term reserves, it only ever means revaluation reserve. This term that we use in the sector and that we use in Humentum of general reserves is not used and it's not defined in INPAG. Now, there's a really important note in the INPAG illustrative financial statements, movement in funds note. It's big and complicated, don't worry. What I want you to spot here is that these total funds without restrictions of 692, which we saw from the balance sheet, has actually got some internally designated funds in it for capital improvement works and IT development, and the general fund is 342. That's important when we come to calculating the level of general reserves according to our definition. Now, we want to compare it with expenditure. So our total expenses, again, in these illustrative financial statements, total expenses for the year is 2241. Now, let's come and have a look at a reserves policy. So reserves policy, as we train about it in our Humentum trainings, is really a target level of reserves set by the board. It's often expressed in days or as a percentage of annual expenditure or income. Sometimes it's expressed as a raw amount, but more often it's relative to other numbers in the accounts. And in that policy, there's also a statement for the reason why 20 days or 90 days or what have you. Now then, in the commentary that comes with the financial statements, the narrative report, what we have always recommended is that you talk about your actual level of general reserves, which you can calculate from your financial statements, versus your target as set out in your policy. And then if it's too low, you can talk about your plans to build, or if it's too high, you can talk about your plans to spend. This is really important for financial resilience, financial sustainability, and also just for demonstrating why we need to hold reserves and why it's important to generate surpluses sometimes to build up the reserves to a target level. So it's really important for resilience, not just for assessing it, but even for improving it and for communicating that with tax authorities and regulators and donors and all stakeholders. For example, if we were going to be doing this commentary for our sample organisation in the illustrative financial statements, and we've got these unrestricted fund balances, you can see there the general fund of 342. We'd start by talking about the target level. So the target level of general reserves, according to our policy, and this is a completely made up number, there is no one right number, but in this example, let's imagine, is 20% of annual expenditure. That's the 2241, which gives us a target general reserves level of 448. Then we talk about the actual level. Our actual level of general reserves is 248, which is made up of 342 general fund minus 94 in unrestricted fixed assets. Now, the bit that's really important here is that split of fixed assets or non-current assets into the amount that's restricted and unrestricted is not currently disclosed in INPAG. That means that all you're left with in the financial statements is the 342 number. You don't have a way of calculating the general reserves by taking out the unrestricted fixed assets. So that's key. Then the final bit of the commentary would be talking about the plan. The shortfall on our desired general reserve level is 200. That's obviously the 448 minus the 248. We therefore plan to generate unrestricted surpluses over the next 2 years. So this is what we think would be a great example of the type of commentary that could go into the narrative report that would be very powerful in communicating and measuring financial sustainability. So you have an opportunity to share your voice. Please do using the link there before the 16th of September. If you think that it's important to be able to calculate general reserves, this is the way that Humentum does it. We're really interested to hear what people around the world think. Thank you so much. Have a great day.